I am back. I told you we would have a ton of earnings previews for this week. And today we are looking, I'm so excited. We are looking at Apple. And why am I excited? Because I have a position in this beast and I'm excited to talk about what potentially can happen here, what has transpired since those April lows, what has happened over the previous earnings reports, and give you both the bull case and the bear case for what can happen on earnings. Now, I will say with the position that I have, I'm in this thing for 6 to months. So regardless of what happens off of earnings, if it goes down, I'm actually going to add to my position. If it goes higher, I will trim a little bit, but I'm not unloading the entire thing. So I'm going to try to give you the most objective, unbiased perspective that I can on Apple and just let you know what my thoughts are on this ticker in terms of what can happen. So let's just analyze the price action today. Again, we are down slightly 10 points on the SPX at the time that I'm recording this. It is a Tuesday. Apple's going to report on Thursday alongside its good buddy of the Mag 8, Amazon. And you can see right now, Apple is down a bit. We are at $212.49. And we are having a little bit of a red day. And you can see that the price action dropped down to $211.49 today. And you did have some buyers who stepped in here. It didn't come down to that 20. And we could see that right now, interestingly, we have the 20 EMA crossing over our 100 EMA on the daily. I always like to pay attention to the convergence of those exponential moving averages and simple moving averages. So that's something unique that stands out to me. But we could see that really we have just been range bound since we popped higher from those lows from tariffs. And I had this drawn on my chart here the other day that really we have a clearly defined resistance area right here that was established back on April 14th. And we've just been hanging out at the top of that resistance right now. And if we look at the support, it was established here on the 21st of April, and we've come down and tested that area multiple times. And you could see that we have been making higher lows as time has gone on, but we have not been able to break this resistance that is in place here. And you could see that we are sitting right on this thick volume node on the VRVP, and above it, there is not much in terms of volume for this thing to push. However, what we need to look at is we have two critical long-term moving averages here, one being the 200 SMA on the daily and the 50 SMA on the weekly. So even if this thing would push up, it's going to experience some resistance in this area. But we'll get to potentially what can happen after we take a look at what has occurred over the last few earnings reports. And it hasn't been pretty for Apple. So here we go. The last report, May 1st, right here. What happened? It was at $213.48, which happens to be higher than the actual price right now, which is pretty crazy. And let's measure this close down to the low at the bottom of that wick. And we had a move of $11.16 to the downside, 5.23%. And so we had a gap down and the bears won that report. So 1W here for the bears, so about 5%. Again, tariffs really impacted Apple because of their manufacturing in China. There was a lot of concern about that, how that cost is going to be passed on to the consumer. And so the bears got that win. So let's just keep going back here. We could see their previous report, January 30th. Let's look at this guy right here, actually right here. So it was a red day, and this price action, we closed at 237.71. Wow. It's hard to remember when Apple was at that price. And this thing actually did gap up to 247.31. So that's a 4% increase. But then what happened is it sold back down and gave back all of its gains and came down and retested that 100 SMA on the daily. So at first glance, it looked like the bulls were going to win, but the bears dropped it back down, faded those gains. So this is a win for the bears. So we're putting fade down here. So the bears, 2 for 2. After that fade lower, moved sideways, built out some support, pushed back up, and then the dump started. So we had a gap down, a fade down, the last two reports. Let's come over here to the fall, Halloween. And what did Apple do here? All right, here's the candle. And you guys are going to see a trend here that's happened over their last few earnings report. It gap down. Now, that's not a huge gap down, and there was some buying that came in, but $5.51, 2.44% move, and this was a win for the Bears, although not a massive win. But you could see off of that gap down, what happened is you had buyers come in, it moved sideways a little bit, and then it pushed higher. And that gap down brought it to 220.81, again, which I'll note is higher than the current price action. So the Bears, 3 for 3. Are they 4 for 4? Let's go back to August 1st. And guys, you know what happened on August 1st of last year? Yes, the flash crash. Here's the earnings candle. It actually did move a little higher. So we closed here and then we pushed up. So that's a tiny move. We're just going to call that even because the candle body closed inside here and then there was a big dump. We're just going to call this even. All right. Because you can see here, the day of earnings, it sold down, right? And then what happened? It did pop higher, but it gave back all those gains. It did close a little bit lower than, or excuse me, a little bit higher than the close of the previous day, but it's pretty much a wash, okay? So really a big nothing burger there. And then the bottom fell out on the flash crash and this pushed back up higher. And even back during that flash crash, that price was at $220, which I'll point out is higher than where we are today. So Apple really has not done much of anything its last few reports. And then let's go to May 2nd of last year. This will be the last one that we look at. We can see here that the price was at $172.97. And notice this thing was pretty beat up and languishing, right? And it had established a support here after a big run. And then on this report, we gapped up. Wow, Apple had a gap up 8%, 8.01%. $13.87. So this was a gap up and a sufficient gap up. And it did sell down a little bit, move sideways, and then continue to push higher. So if we're just putting all this together in terms of what happened, the Bears dominated 1, 2, 3, and we'll give this even earnings report to the Bears as well because that was during the flash crash. So the Bears have dominated earnings on Apple. The last 4 times, the last win for the Bulls came in May of 2024, which brings us to current day, okay? Now, keep this in mind. We are slightly above where the price was back in June of 2024. So for about a year, Apple has been moving sideways, okay? And so there is an opportunity here for this thing to move higher. And why is Apple struggling as much as it is? It comes down to artificial intelligence, AI, and the lack of a clear game plan for Apple in terms of what they're doing with their artificial intelligence. And that's why the stock gets hammered and continues to get hammered. And what is going to have to happen in the conference call is they are going to have to lay out a very clear action plan for what they are doing for AI, how it's going to impact their business, their customers, and make the company better. If they do not do that, this thing is going to get smoked. It's going to get smoked. There's no doubt about it. And I would have to think as an investor in Apple, as Apple being one of the most valuable companies in the world, that they're going to deliver. They have to, right? They have to. I would say AI 8 million times in this report because you know what's at stake here. So just looking at it, we're just testing this range. We're bouncing around in this range. And let's take a look at what would the bull case be here in the event of a move higher. It's pretty obvious to see we're sitting on decent support here on the VRVP, thin volume ahead. Apple's not a massive mover higher off of earnings, but I think it's very evident that we could see these moving averages that are above us, the 200 daily and the 50 weekly, this is going to be the bull case. So we can move almost 4.5%, which would almost be $10. So we'll say 222 even. This is going to be the bull case. Bull case, $222. And I'm going to put right on the moving averages. Okay. Now, if it does have a strong report and it gaps up, it should find some support and consolidate on those moving averages and then continue higher. That's what I would like to see with the position that I have, obviously. But again, that's what makes sense. Again, thin volume. We are not overbought. The volume is actually pretty steady here. So there can be a move coming here on Apple. And you also have to take into consideration, NVIDIA has had its moment to shine. Tesla, back in December, had its moment to shine. Microsoft has had its moment to shine. Meta, new all-time highs. Amazon really has hanging out, not doing too much. But Apple is the biggest laggard of this entire group. So you would have to think at some point investors are saying, hey, there's an opportunity here. If they can deliver on AI, this thing can push. All right. So bull case 222. Now, here's what I'll say. If we do get a weak report, the bear case is going to be worse than the bull case. And I think what will happen is we are going to come down and retest these lows. And you could see if we break through this 195 area, there is nothing down here to hold this up. So it could get ugly. It could get ugly. And I think you could see almost a 10% move. I'm going to put us here right at 10% to the downside. And let me drop a line here. And I want to make sure that this is, what is that going to be? Let me check the coordinates. We're going to put this right at 190 flat. So this is going to be our bear case. All right. Again, I think it will be an exaggerated move if Apple does not report well, if they don't talk about their AI, if they don't have a clear plan. I think we're coming down here, and I think it'll be a slow bleed lower that we won't find support until it will come down and touch this 200 on the weekly. If that is the case, because of the position that I hold, I will begin to add at 190. I will add around 185, and then I'll also add around this 200 SMA on the weekly. In the event that it continues to fall further, I would wait and not add more to my position until we got down to about 169, and that would be the low that we made on April 8th. So the big question, what do I anticipate happening here with Apple? And if you watch the Amazon preview, I think that Amazon has upside potential. Meta has upside potential. I even think Microsoft still can go higher. If I'm looking with Apple, as much as I don't want to say this, I don't think it's ready yet. And I think the earnings call is going to underwhelm, and we're probably going to see another move lower on this. However, I think that move lower will get bought up. I think that as investors parse through the data, through the report, they're going to find some positives. We'll see some price upgrades, and you'll see buyers step in after that. Again, I'm being very patient with this one. In January of 2026 is where I will make a decision about what to do with the position. I'm leaning more towards a drop on earnings. This point, based on what I've seen, how it struggled to break that 214, 215, 216 area, and every time it moves up there, it gets smacked down. But I hope that I am wrong. So that's my take on Apple. What a week this is going to be. I can't wait till Thursday. Let me know in the let me know in the comments below your thoughts about what's going to happen with Apple. Is it moving higher? Are they going to shock the world with their AI? Are they coming lower? Let me know. Smash that subscribe button and make sure you check out the Roku and the Roblox earnings previews that I have coming as well. And I appreciate you guys so much. Thanks for supporting the channel. Make it a great day. Take care, everyone.
Crocodile smile, we're burning down with the fix. Oh yeah.